The Nasdaq finally pushed above the 4,000 level as many tech names are reporting strong quarters and pushing the tech sector higher. However, not every tech darling is doing all that well. The social media stocks have been leading the charge. Well, then they started to show some signs of weakness. Just when you thought you could maybe get some bargains, looks like they could reverse course. So joining me now is Scott Redler from T3 Live. Now, Scott, when we look at Facebook had topped out at 54, then it pulled back to 45. It looked like it could go even lower. Maybe you could get a real bargain. Then it reversed course. So it's really confusing. How does one approach Facebook at this point?
Well, whenever you correct like Facebook's corrected, people have to put it in perspective. The stock went from 25 to 54, so a move down to 45, 44, not the end of the world. So the question was, how low would it go? And you had that head and shoulders pattern top that has created some of this weakness, and some of us were looking for follow through. Like yesterday, I was all negative on this social media stocks, and then the same thesis like we've seen in 2013, all of a sudden you get a reversal, so you need that quick feed. So if we take a quick look at the chart there, for 2013, you will see right there that basically you had that cup and handle pattern that gave us technicians a good sign that we would see a nice extended move. And then you look to the right, you see that head and shoulders top with the top at 54. The measured move was down to like 42 and change, and it reversed today at 44. So that was a small signal for active guys like myself to switch some gears. Maybe if you were short, cover, and I think some even tested some longs around 44 versus that low today of 43.5.
All right, Twitter is another name. Now, this company obviously has not been public that long, but ever since it came public, it's really kind of trended down. I mean, it was at 50. It's now right around that $40 mark. What do you do when you look at Twitter? I mean, do you have to wait till they report a quarter, or can you trade it now?
Well, it depends on your time frame. If you're trading it actively, you have prices and points of reference. It's been, since public, it's been disappointing. They priced it too high. The first day, there was absolutely no opportunity to make money in it, had some downside follow through. And then if we take a look at this chart, you will see that it tried to build a little bit of a floor between 39.5 and 40.5. And then yesterday, it broke below it. And then today, no downside follow through. It's trying to reverse. So at this point, I think you don't put much money behind it on the bullish or bearish side. You wait for over 6 weeks. We get closer to earnings. Let more price points become apparent. So this way you can make more of an educated decision, because everyone right now has opinions. Some people are saying Twitter's going to 26. Some are saying it's going to 30. Lots of downgrades since it's been public. Nobody knows where it's going to go. But for right now, it's still trying to feel its way out. No need to commit big money to it. Do some short-term trades, and at some point, it'll be clear-cut what direction it'll go, and then there'll be better opportunities.
All right, great, Scott. That is great advice for these social media names, because they have been moving back and forth, a little hard to get a read on. That was Scott Redler from T3 Live, and I'm Deborah Borchardt with The Street.